Did you know that 90% of Indians have a bank account, yet they have no idea what is helping them make money? And the banks, they are loving it because you are spending fees for accounts you don't even need. In this video, I'll walk you through what are the various bank accounts in India, how to open one, and what are the fees you are secretly getting charged. Here's the thing, when you turned 18, your parents probably took you to the nearest bank and opened an account for you. You did not ask any questions, you just got a passbook and left. Fast forward to now, you are earning, investing, and probably saving for something big. But your account, it's the same basic one from 2015. And you may not even realize that there is a perfect account type designed for exactly what you want. That is literally leaving money on the table. Let's fix this. Okay, so first, let's be real. Why do you even need a bank account? Three reasons. 1. This is how money enters your life officially. Salary, freelance income, or internship stipends, all of these get credited to your bank account. 2. This is how you build your financial credibility in front of financial institutions. 3. It is the only way to access credit, investments, and loans. Without a bank account, you are literally invisible to the financial system. No credit score, no access to loans for business, education, or home, nothing. So, yes, you need one. But not all accounts are created equal. In India, there are roughly four main bank account types which you should care about. Let me break each one down. First up, the savings account. This is what 80% of the Indians have, and it is considered to be the default account type. The purpose is simple, you deposit money and earn interest on it. Currently, most banks give around 2.5 to 6.5% per year, depending on your balance in your account. And the best part is you can withdraw your money anytime. The banks are generous to let you keep your money here. Now, who actually needs a saving account? I think everyone, to be honest, like literally everyone. Because even if you're a working professional or a student, you need this as your safety net. Where else will your emergency fund live? But here's the real talk. If you are earning well, this is not where your serious money should sit for long. Now, current accounts. Think of these as accounts specifically made for businesses and people who move a lot of money constantly. Here is what makes them different: unlimited deposits and withdrawals, no withdrawal limits whatsoever. Plus, you can issue checks and drafts as many times as you want in a single day. But here's the catch, you earn absolutely zero interest on your balance. Not zero point 0.5, not 0.1%, literally nothing. And the monthly charges usually vary between 500 rupees to 2000 rupees depending on the bank. So, who actually needs a current account? Honestly, if you are running a business or freelancing seriously or making regular transactions, then yes, you should get one. But if you are a regular salaried person, then you are just throwing money at the bank for features you will never use. Then there is the salary account. And honestly, most employees don't know it exists because usually their companies just open a regular savings account for them. But some companies, especially startups and larger organizations, they specifically open salary accounts for employees. And this is because these accounts are specifically designed for regular monthly deposits for the payroll. And the benefits include lower minimum balance requirements, zero or minimal monthly charges, decent interest rates, and sometimes even insurance and overdraft facilities. It is basically a savings account optimized for earning employees. Now, is the salary account right for you? Here's the thing, you can only open this account if your company or employer sponsors it. You can't just walk into a bank and tell them to open one. It has to be your employer who requests this. So basically, you're stuck until your company makes this move. Lastly, we have deposit accounts. These are a bit different because they are not for daily transactions. They are for parking your money and letting it grow. Two types: fixed deposits and recurring deposits. When you open a fixed deposit, you basically deposit a lump sum, let's say 1 lakh rupees, for a fixed time duration such as 6 months, 1 year, 5 years, etc. And you earn a guaranteed interest, which is usually 6 to 7.5%, depending on the bank you choose and the duration for which you park your money. No withdrawals are allowed until maturity, or else you may end up paying early withdrawal penalties. A recurring deposit is similar to an FD, except you do not deposit a lump sum. Instead, you deposit a regular amount every month for a fixed duration, and you can earn guaranteed interest at a similar rate as that of an FD. This is a great alternative to an FD if you want to force yourself to save regularly every month and you cannot trust yourself with a lump sum amount. So here's my question for you. Should you have an FD or not? If you are saving up for a goal which is at least 6 months away, or you want to beat inflation on money which you are not using right now, and you want zero risk guaranteed returns, then yes, fixed deposits are for you. But if you need your money accessible, or you are someone who lives paycheck to paycheck, then I would not recommend this for you at the moment. So these were the different types of bank accounts in India. Now I realize the video is getting a bit long, so I've split this into two parts. In the next part, we'll get to know how we can open a bank account, what are the various fees and charges associated with a bank account, and more. So stay tuned for that. Have a nice day.